And welcome back to our Market Day Report. Set your clock. It's 15 minutes to the top of the hour. It means time for your grain update, and we want to do just that. Let's go to the board and check out a corn trade higher overnight. Not much, about a penny or so, but we are moving to highs of the day. And in fact, surpassing our earlier highs here today. September setting a high at 328. Right now we're 327 and a quarter, 3 cents higher. So at or near highs of the day in the corn trade, even though it's just a penny to 3 cent advance in here. December new crop 2 cents higher, 336 and a quarter, and the high today 337 coming here just moments ago. Let's go to Chicago and check in with our good friend OliverSloup, iiTrader, joining us live from the floor. Oliver, hope you had a good weekend.
It was great, and it looks like the grains are off to a pretty decent start here this morning. It had a good overnight session that started Sunday night, carried over, and then we saw the sellers step in at the floor. But we've kind of rebounded from that, which I think bodes well for this week's trade. One thing to keep in mind, we do have a USDA report on Friday, so we're probably going to see some squaring going into that. It'll be interesting to see what the corn market does. We had Informa estimates out on Friday. They're looking for a yield at about 169.8. That's a little bit lower than analyst expectations. So it'll be interesting to see what USDA comes out with.
Exactly, yeah. You mentioned that crop report Friday, and these private estimates are coming out. That's one that a lot of traders watch. They just mentioned, and a number below 15 billion bushels. How'd you feel about the number you saw?
Well, yeah, it kind of in line with what we were looking at for the most part. Not really putting a whole lot of weight into some of these private estimates because the USDA is ultimately the number that you have to play off of.
Sure.
And so that's what we're kind of waiting for, trying to sit on our hands as much as possible so we don't do anything irrational going into the report. A couple key technical levels to keep an eye on for that December corn contract. 329 is the contract lows. We're going to want to hold that on a closing basis. If we fail to do that, we could see some accelerated selling pressure press us towards the 318 and a quarter level. That goes back to the 2014 lows for about this same time period. Now on the top side, the bulls do have their work cut out for them. They want to see a close above 345 to 348. That's the 20-day moving average, as well as it used to be previous support, and that now becomes resistance. If the bulls do get out above that, we could see the funds start to step in on the buy side. Friday's commitment to traders report showed that they added to their net short. They're now net short about 86,000. So a close above that resistance pocket could lead to some short covering in the near term.
Very good. And we watch those numbers as well. How about the soybean trade here? Beans higher near their highs of the day as well. 8, 9, 10 cents higher or better, Oliver.
We're going to want to see a strong close in the soybeans as well. Obviously, the bulls need to get out above some of these levels. The level we have a key eye on is 989.5. That's a Fibonacci level. If we fail to break out above that and see selling come into the market, that will mark lower highs. And what comes after lower highs? The trend recently has been lower lows. So we're looking at support 956 and 3/4. That's a 200-day moving average. So we're looking at about a 30-cent range here intra-week. Now, it'll be interesting. Again, the funds reduced positions for, I think it was probably the 8th week in a row. They're at about 97,000 long contracts. They reduced 17,000. It'll be interesting to see if they reduce a little bit more going into Friday's report.
And another private estimate not showing a 4 billion bushel bean crop, 3.95, one of the major numbers this morning.
Yeah, definitely, and that's going to be, one of the lines in the sand that a lot of traders, as well as us, will be keeping an eye on going into Friday. And
looking quickly at the wheat trade, if we take a break here, wheat higher as well, but again, that's after near 10-year lows. Maybe they did hit 10-year lows last week, did they not?
Yes, they did, and we want to see a strong close. I'm starting to step in pretty lightly on the wheat. I like the strength that we're seeing. I really want to see a close above 419. That's a 20-day moving average. We haven't closed above this level since, I think, mid-June. So a conviction close above 419 might encourage funds to cover. They've got a pretty large net short position, about 141,000 contracts, unchanged from the previous week. But it's nice to see that unchanged, and they weren't adding. It shows that there's, I think, a less value to the downside, and I think now the risk is to the upside once those funds start to cover.
All right, penny or so higher in Kansas City, 3 to 4 higher in Minneapolis. OliverSloup joining us live from Chicago. We'll take a break and come back and put him to work for you in the livestock trade. Comments there as we continue 1 minute away. Welcome back to Market Day Report. 10 minutes to the top of the hour. Let's go back to Chicago. And OliverSloup from iiTrader joining us. And before the break, looking at that grain trade now, much the same in the livestock trade, looking at live cattle and feeder cattle. Overall beef complex as we sit here now this next second full week in August.
Yeah, we're kind of trading mix here to start the week. A lot of trade left here throughout today's session as well as throughout the week. A couple levels we're looking at for the October live cattle contract, 118.67 is really the next line in the sand as far as resistance go. We've seen a nice rally here over the past 2 weeks. I believe 9 out of the last 12 sessions have been higher, and that comes off of the recent low, or the contract lows, pardon me. So a very nice run here over the past couple of weeks. On the support side, 115.06. The bulls want to close above that. We're kind of treading right around that here this morning. That's the 100-day moving average. If the bulls can't sustain price action above this 100-day moving average for at least a couple more sessions, that could mean that we're in for a near-term top and could see some profit taking from the recent rally higher.
So, as you mentioned, the mixed trade, October down 40, 115.13, while December is up 2 at 115.70. Let's turn to feeder cattle. OliverSloup joining us live from Chicago. We are higher, 40, 60 points. In fact, October up $1.02 points and had been over 145 earlier today. Talk about the feeder cattle complex.
Yeah, the feeder started out with a nice little pop on the open, then we saw it kind of come back a little bit. Now we're just kind of wavering around here towards just slightly positive. We're looking at the August contract still, just a couple weeks left. 153.30 is the 200-day moving average. That's going to be a level to keep an eye on the support side. 145.75, the 100-day moving average. We've had a great run, just like we had in the live cattle. So it'll be interesting to see if buyers continue to step in at these slightly higher prices, or they look to take some profit off the table if they were buyers of the recent dip.
And then looking at the lean hog complex, again, OliverSloup joining us live from Chicago. We do see with these lean hogs, October at new contract lows last week, bouncing off of that again. Is it a bounce that you are comfortable with?
I am not comfortable with the lean hogs at all. I've mentioned it quite a few times. I want to be a buyer, but I want to see more sustainable price action. This is a nice, healthy bounce, but we want to see a couple follow-through sessions of good strength throughout the week. This is, I think, if we get 2 consecutive up days, it'll be tied for the longest consecutive rally in the last month. So I'm not jumping up and down just yet. I'd like to see some more strength come into the market, and not necessarily in a big way. I would like to see, just up a couple points here and there, not necessarily a spike higher, because a spike higher indicate this likely just short covering that's going to be sold into later.
Very good. All right, and we're going to give the numbers now to those folks tuning in on the radio. But Oliver, we're going to let you go, and thanks for your time on a busy, busy Monday.
Thank you.
OliverSloup live from Chicago, iiTrader joining us. And let's get to the numbers here. Live cattle, feeder cattle, and hog futures as we close things out here. Live cattle, October, down 33 points right now, 115.20, and that is after a low, a 114.98. So we're only about 22 points from our low of the day. Feeder cattle on the day. Still, futures moving higher for feeder cattle through the day. And looking right now, we look at feeders still higher on the day, and watching some 100-day and 200-day averages that Oliver just pointing out. Right now, October up $1.02 points when just short of 145. Right now, 144.90 after a high today at 145.25. Finally, looking at the hog trade, interesting. I'm not jumping up and down. He said, I want to watch this hog market a couple of more days, and so it is. We look at October lean hogs up $1.55. They've been a long way down, and they're coming back slowly here. And October up $1.55, 59.85. December hogs up $1.33 at 55.40. So we continue to watch all those numbers. Well, they watch them every moment, and that's why they're on our team.
Especially today, though, you'll be watching those 15 minutes at a time to see if we keep that consistency in the hog market. All right, thank you so much. Markets editor Mark Oppold.